So thank you everybody for attending the weekly market analysis webinar. I'm hoping by this point you've had enough time to have a look through the risk warning that's on the screen here. So we're going to switch gears to the slide. So for those regular attendees, I've switched up this slide a little bit. The logic being that if you do want an understanding of some of the key news items, in our opinion at least, for the week ahead, definitely check out the week ahead video. But my sense is that most attending this webinar are looking for the price action, looking at an analysis of the chart. So I've tilted the analysis on this slide now to more orientated towards the price levels. So still talking about the shorter term aspect of what's potentially happening this week, what the big levels could be, what the trends are if they're changing, but also a bigger theme reflection of things. So one being, we're talking about the euro. Potentially we're talking about a top in the euro here. So looking at these bigger themes, 120 potentially a top. Now that's the way that's where we pulled back from just above 120. We reached about 120.50, I think, or maybe even 121 almost. 120 is a big number that everyone's paying attention to. In sterling, we're in a kind of, it's an uptrend on a weekly chart, as I'll demonstrate in just a minute, in my opinion, but there's some big swings taking place. And so we've had a bit of a big down leg, and we seem to be recuperating at the moment. So what we're looking at the moment is 133 is potentially key resistance here in this little resumption that's taking place at the moment. To my mind, if we can get through that 133 level, then we're actually looking good for this sharp downturn. We're now correction territory, and around the 50% correction of that downturn. If we get through that 133, which is right around that 50% retracement level, it bodes well for this correction turning into a resumption of a longer term uptrend. With dollar yen, it's quite clear when you look at the weekly chart that we're stuck in a 108 to 114, roughly 600 pip range. That's got to be your, well, I say it's got to be. It's the way I'm thinking about trading on the short term, is in the context of that range. So should we get through one of those, through that floor, through that ceiling, then the way you approach the market has to change. But for the moment, we're in that kind of choppier range, and it looks like on a shorter term basis on dollar yen that we were turning down from a little bit of a top. The fact that we've dropped through 112 suggests to me these spike highs that we've got around 113, potentially a little short term top. Euro sterling, the question for me is whether we've got a 925 double top, or in fact if we take out those highs at 925 and we head over to parity. I tend to think it's like the former, if not a double top, at least a recess to the bottom of the range. Moving on to equities, the FTSE has had a really good run. We're now rushing in towards the question longer term is do we take out 7,600 and do we get another record high for this year? So obviously the US indices have been getting record after record. We've seen a record in the DAX. We've had the 10th straight record closing high for the New Zealand stock index. Not something I mention a lot, but a sign of some of the froth that you're getting in markets at the moment, and a sign of the strength of the bull trend. But as I said, the FTSE's not really participated, or the UK 100 as we trade it. So I think we're looking a bit overstretched. There hasn't been much of a pullback in the FTSE in the UK 100. If we drop through the 7520 mark, which you'll see in the chart in a minute, that could be for me maybe a time in which we get some, maybe another leg lower. For Wall Street, just the longer term question is when do we actually get a decent pullback, because it's just an ongoing uptrend. And for me, it's actually quite difficult to trade this market because you're looking for some weakness to buy into, and it just doesn't happen. Every day you get new record highs or thereabouts. So you really have to be trading the momentum, trading breakouts, and it really suits some people, but it's actually something that doesn't necessarily suit me so well. So the trend is almost too strong, which sounds ridiculous to say. One thing to look at, we'll look on the chart in just a minute, is if there is a pullback below the 4-hour 20 period moving average. That's been a really well-defined support, dynamic support. So if we get a drop through there, maybe that's the first sign that actually we are getting that long-awaited pullback. If not a correction of on a longer-term basis, at least the sort of bigger drop that we typically see every sort of 2-3 weeks. So we're basically right at 13k in the Germany 30 at the moment. So the question is, do we move on from here to 14k? We've been struggling a bit. I suspect we chop around this area for a while, but if you're judging the trend, then really they should be the main considerations. Brent Crude, so we had that drop, but we've been moving steadily higher at the end of last week and this week. Obviously some geopolitical tensions, the cause fundamentally, but trend-wise, we basically ended a pullback, and with benefit of hindsight, you can see that actually it's doing quite well. I did mention in the week ahead video that I didn't think we were going to drop below 55, and Brent, we actually came down, tested 55, and we've moved up from there. So it's acting as I suspected, and I'm anticipating a move through 60. But obviously, whether we get that even in the next week or so is obviously up to debate. The market will give us what it does. And then last but not least, gold. It's looking strong at the moment. We had some weak US data, so that was the short-term catalyst for some strength. But every time it has this big dip, gold always seems to find some resilience and trade higher. So in the shorter term, 13.14 or 13.15 is around the number. Potentially some resistance. We'll look at that. Okay, so don't worry, it's not over yet. Let's have a look at the chart. So here's this euro-dollar weekly chart. So obviously, here's what I'm talking about. We probed above 120, but really that's the big level that we're considering. And it was at the end of a huge rally, which took us out into one-year highs in euro-dollar, above the top of the range. So what we're doing at the moment is we're basically testing the top of the range at 117. If I pull it out a little bit, it's almost clearer, but you can see these highs from June last year, from June 2015, from February 2016. We're basically in that sort of territory for a retest, and you can see from this chart, if these levels don't hold up, then I think it looks quite likely that we're heading down for a test to maybe 114.50 or 115 being the round number. At the moment, I'm assuming we do, because we're above 50 on this level, and 117 is quite key support. But it's starting to look a bit like like potentially a top here. Mm-hmm. It looks a bit like a head and shoulders pattern, but it hasn't. We haven't broken through the neckline. But that's why I've said in my slide there that 117 is the critical support, because that to me is the neckline for this potential head and shoulders pattern here, which could trigger that move down to 114.50, or perhaps just 115. So looking at this daily chart, we're back below the 50 level. We're obviously hovering in that vicinity. We had the breakout last week. We're pulling back that breakout, but the question is, are we done with this correction here and breaking out again to the top side, or is it more like we're just testing the underside of where we drop down here? See where there was the support here around the sort of 118.60 kind of area. That's where we topped up last week, and then we're going to roll over and drop below 117. It's not entirely clear, but in terms of risk to reward ratio, I don't think we're in a particularly good spot at the moment. We're around 118. To me, it seems if you're down at 117.50 down as far as 117, then you're in you're in a better position to trade any kind of rebound to the top side. Equally, if we get a break through these highs up here in and above 119, then it looks more likely that we're resuming to the top side. But at the moment, we're kind of mid-range, and it could, to my mind, go either way. Just so we have to bear in mind the significance of this top near 120. So sterling, a little bit hard to see with this fib on there. I'll put that on again in a second. But as I mentioned, in a kind of broadly swinging uptrend, as you can see from this chunky trend line that I put on there, above the 50 level on the RSI, holding above all the moving averages on the weekly chart. So, that gives us a generally sort of bullish bias. So we've had this nice bounce. But as I mentioned, in last week's webinar, I think I mentioned it, I had the 133.50 down as a key area of resistance. With a bit, now looking back, I think maybe that using that 130, I just used it because it lined up quite nicely with a round number. But really, maybe it's one of those instances where you don't actually use the real high in the fib, and you actually look at really what was the critical level for the market. And it was probably here actually. It was probably the one just above 136, and then we got that little false break with a crazy lower close down here. So maybe this was the key level, and then obviously with the benefit of hindsight, you can see that was basically where we tapped into the high there and rolled over a bit. So this is, I think, the key leveling cable, this 132.20-ish, 133.30 maybe. And that's why I say generally 133 being the kind of big level that we're hovering around. If we get substantial close above here, then I think it looks like this correction's over and we're pushing again to the top side. But the risk is at the moment that we roll over to come and test down the lows here at the moment. The one thing that really kind of suggests to me that we probably can push beyond these levels to the top side is, I don't know how best to highlight it, but this candle here, where we tried to roll over big to the downside, and there was a lot of buying interest down here, and we even though we went this far down in the day, we ended up closing up at the highs. That was a very bullish candle. We've continued since there, but we've just pulled back naturally from this 50% level. So I think the longer term trend is up, but the jury's out as to whether this correction's over. It's looking like it probably is. Obviously, the big one is UK inflation data out tomorrow, where we potentially are looking at 3% inflation in the UK. If we're looking at 3% inflation in the UK or above, you'd naturally assume that's positive for sterling, and obviously vice versa. Here's this long-term dollar-yen weekly chart. So obviously stuck in a range. Now we're pulling back from not from 114 or 114.50. We're pulling back from lower levels, basically 113. So this was a lower low down here, and now we're in the process of forming a lower high. So it's weakness within a range. I certainly wouldn't categorize it as a trend, but some slight weakness coming into the price. Sellers getting more aggressive in terms of how far they're willing to take it down and how far up they're willing to start the selling process. So it's looking a bit soft at the moment in dollar yen. And as I said, the fact that we dropped through 112, you can kind of basically see was basically the kind of key support that the market was trying to push off, but it held the broken trend line and rolled over to the downside, made a lower low on the short term. Now, as of today, we've made another little retest of 112, and we're back down at the starting levels. So if we finish today lower, having tried to push to the top side, that would be, again, another very weak candle, and would suggest we're probably dropping through 1150, probably through 11, and further to the downside. And basically, the assumption will be the retest to the bottom of the long-term range around 108. Euro sterling quickly. Here's the potential double top that we're looking at here. We had the big drop. We rebounded pretty much 50%, and now we're rolling over again. Is what seems to be happening. So this is generally a sort of fairly positive for sterling looking outlook at the moment. If you follow me on Twitter, you'll know that I mentioned this bearish engulfing candlestick when we put it in the following day. And we have moved lower since, and we're basically finding a little bit of support around the 20-day moving average, 88.50. A bit of support because it was sort of where we broke out from down here. We had this little triangle at the bottom here, and then we pushed out above 88.50, and that's basically where we're testing, is that breakout area at the moment. But this is quite a big bearish candle from a key level, and obviously we had the big down move before it, so it suggests to me that we've had the bounce and that we're rolling over for a retest of 87 and potentially further to the downside. Here's the FTSE. So we broke above the descending trend line here, so that's bullish. We didn't get much beyond it, and we are getting some negative divergence in RSI, which is not such a great sign, but I've been ignoring a lot of the negative divergence in stock indices of late, just because the market's so strong anyway. We tends to just plow straight through it. But we have been stalling a bit in this area, so that's why I mentioned this in the slide at the start. The 75.20 is just these lows from the 3 days last week. If we drop through there, shows a bit of weakness to me. And you've got the trend line just below, suggests to me that maybe we drop down, maybe retest these highs down here. That would be a potential scenario to look out for, is a short-term drop through here, and then maybe reassess whether this is some weakness to buy into down at 74.50. Obviously, this is the Wall Street chart. It's just ridiculously strong. We're up above 22,800 now. It's really a situation where I think the only viable strategy is buying breakouts to the top side, because very, very shallow pullbacks at the moment. But if you do get a drop through the previous days, I think the one to look for is if you dropped through the lowest in the past 10 days. So say something like in this, even just 2 days. So if we have 1-2 days low, and then we've got a drop through, then there's a correction. 1-2 days and a drop. That was the end of that correction. Low, drop down here. It tends to presage a bit of a pullback, but again, not much recently. And then one thing I was just going to show you is this on the 4-hour chart. You can see how this moving average has been holding up the price pretty nicely. The 20-period moving average on the 4-hour chart is not a million miles away from the 50-period moving average on the 1-hour chart. Is my maths correct there? More like the 100-period moving average on the 1-hour chart, if that's what you use more regularly. 20 on the 4-hour works pretty well at the moment, so that's a little dynamic gauge for maybe a drop through there. Would be an indication that this very rapid short-term trend that we've been in is coming to an end. Germany 30, so as I said, stalling a bit around the 13,000 mark, but we did close positively last week, albeit with a very narrow range. But it looks like the market's fairly comfortable to move on from here. So I'm assuming this trend continues, but we have to be aware that we've had a good amount of consolidation around this 13,000 mark. Is that consolidation with further accumulation for topside, or is it distribution? We don't really know yet, but I'd assume that there's just a natural consolidation before further moves to the top side. But I think it's this 12,900 caps the bottom of the range quite well, so watch out for a move below there to be a bit more cautious about the upside. Gold, this is our weekly chart. So this is what I mean about, we've had some big moves, but there's always a big drop afterwards, big move drop, and then we're obviously in the middle of that at the moment. We had this weekly hammer pattern, which preceded a nice move to the top side. It was right off that 20-week moving average. So it looks like this latest downdraft is over, and we're pushing down to the top side. So originally, a few webinars back, we were looking at this 1295 as a potential area for the market to correct. We got down just to the 20-period moving average, but we rolled over this 1314, kind of 1315 area, and had another drop down, a bit more steeply than I would have anticipated, but the market's moved strongly since. And if you are looking for some idea of a pullback, that was last week's high. and that was that big bullish engulfing candle. So if you looked for a 50% pullback, it'd be in around this sort of 1298 area, and is basically where those two previous little highs were there before the breakout. But as we speak at the moment on Monday, we're pushing into new highs for the day. So looks like maybe just these two little pullbacks is the only thing we're going to get before another push up, potentially to these two highs up here. And now just looking at Brent Crude, this is that downsloping trend line that we've mentioned for the past few weeks. It's why it's why I've been quite positive on the market. Even after we had that big pullback, I thought 55 would probably still hold. It has, and so now to me it looks like this correction's ended, and we're pushing up above 58 as we speak. 59 is basically this peak here. So 59 obviously a short-term potential resistance as people try and sell into maybe a double top. But to me it looks like the trend is going to continue beyond 59 at some point in time. Maybe not this week, but maybe next. Right, so I think that is about that for this week. Thank you very much for attending, everyone. I hope that was of some use, and good luck with trading, and I will see you the same time next week. Jasper signing out.